Hey everyone, welcome back to the channel. Now, let me ask you something real quick. Ever felt like you're doing everything right with your money? Like you're budgeting, saving, even throwing some into investments, but somehow, it's still not working out in your favor? I know that feeling. And honestly, you're not alone. Now, here's the thing. Maybe, just maybe, your money's moving to the wrong beat, out of sync with what the economy's doing. Think about it. If the economy's grooving one way and you're walking the other, yeah, that's a problem. So in this video, we're going to break it all down. We're talking about how economic trends, stuff like inflation, interest rates, and market cycles, how all that quietly messes with your everyday money decisions. And stick with me, yeah? Because whether you're trying to build wealth or just trying to keep up with them crazy prices at the grocery store, this video is going to open your eyes. You're going to walk away with tools, real tools, to stay in rhythm with the economy. All right, let's get into it. All right, picture this with me for a second. You're sitting down, planning your finances like it's this super well thought out road trip. You've got your budget laid out, maybe some investments planned, probably even a savings goal for that new house you've been dreaming about, or maybe a trip, something big, something exciting. Now, that all sounds great, right? I mean, you've got your plan, your map, your destination, but guess what? Even the best road trip can go sideways if you don't check the weather forecast. Think about it. You could have the best car, full tank of gas, snacks in the back seat, but if there's a storm coming, yeah, you're going to run into trouble. And in this little metaphor we're talking about here, the economy, that's the weather. It can be calm, it can be stormy, and sometimes it changes in a blink. So let's say interest rates start climbing. What happens? Boom, your credit card bill goes up. That mortgage payment, more expensive now. Or on the flip side, the job market's looking strong. That might be your cue to ask for that raise you've been sitting on. More companies hiring, more money moving around, that's a good sign for you. But then you hear the word recession floating around in the news. That's when you tighten up. Cut back a little, maybe add a few extra bucks to your emergency fund, just in case. See, here's the thing. Economic trends, they're not just these big, complicated headlines you scroll past on your phone. Nah. They affect you, me, us, not just Wall Street folks in suits, but Main Street, your street, every single day. So the real question is, are you checking the forecast before you hit the road? All right, let's slow it down for a sec and really break down some of the major economic trends that honestly can make or break your financial future. I mean, these trends, they're not just for economists in suits on TV. They directly affect your wallet, your paycheck, your goals. First up, inflation. Yeah, that one's been all over the news, right? Inflation happens when prices just keep rising. But the problem is, if your income isn't rising as fast as those prices, you're basically losing buying power. Like what used to cost $100 last year might cost $110 this year. But if your paycheck's still the same, that extra $10 is coming out of your savings or your lifestyle. So what can you do? Well, adjust your budget often. I'd say review it every couple months. And if prices are going up, cut the fluff. Prioritize the essentials. Stay lean. Next, interest rates. Now this one, it affects a lot of stuff, but most folks overlook it. When the Federal Reserve raises interest rates, borrowing gets more expensive. So your credit card interest, your mortgage, your car loan, all that probably goes up. But here's the flip side. Your savings might earn a little more too. So it's not all bad news. Here's the tip. If you've got debt, try to lock in those low fixed rate loans before the rates climb. And if you're saving, shop around for high yield accounts. Some online banks offer way better rates than the big ones. Now, unemployment rates. Yeah, this one, it can sneak up on people. When unemployment starts rising, it usually means companies are slowing down, maybe even laying folks off. Even if your job feels secure, it's a signal, a red flag. So what's smart? I always tell people, build that emergency fund, 6 to 12 months of living expenses if you can, and maybe diversify your income, side gigs, freelance work, Anything that gives you a backup stream, because when jobs get shaky, peace of mind is everything. All right, stock market trends. Ever heard people say it's a bull market or we're in a bear market? Yeah, it sounds fancy, but it's just about momentum. Bull market means stocks are going up. Bear market means they're going down. But the thing is, these trends do affect your 401k, your IRA, your long-term investments. So honestly, don't panic. It's easy to freak out when you see your retirement balance dip, but investing's a long game. Stick to your plan, keep your emotions in check. The market goes through cycles. Ride them out. And finally, GDP growth and consumer confidence. Now, this one kind of reflects the overall vibe of the economy. If GDP is growing and people are spending confidently, that usually means it's a good time to invest or even start that business you've been dreaming about. But if growth is slowing or confidence is dropping, you might want to play it safe. Save more, spend less, and wait for the tides to turn. So there you go. 5 major trends, all connected, all quietly shaping your financial reality every single day. Stay aware, stay nimble, and always make sure your money decisions are dancing to the right beat. All right, let's pause for a second and think about this. You wouldn't dance off beat at a party, right? I mean, picture it. Everyone's moving to the rhythm, having a good time. And then there's you, 2 steps behind, clapping on the wrong beat. Yeah. Awkward. So here's the thing. Don't let your money do that. Don't let your money dance out of rhythm with the economy, because when your finances are out of sync with what's going on out there, you can end up paying more, earning less, or missing big opportunities. So how do we stay in step? How do we make sure our financial rhythm matches the beat of the economy? Let me break it down for you. Real simple. First up, stay informed. This one's big. You don't need to be an economist, all right? But you do need to keep an ear to the ground. That means maybe subscribing to a newsletter that gives you the economic scoop in plain English, or setting up alerts when the Fed changes interest rates or when inflation numbers drop. Just knowing what's happening out there can help you make smarter moves in here, in your wallet. Second, adjust proactively. And notice I said proactively, not reactively. Most people, they wait until it hurts and then they change. But if inflation's rising and you know prices are about to jump, why wait till your grocery bill punches you in the face? Start trimming those non-essentials now. Switch brands, cancel stuff you don't use, maybe even cook at home a bit more. It's about being 1 step ahead, not 2 steps behind. Third, invest smart, not fast. Look, you hear stock market's up and suddenly everyone's talking about crypto or AI stocks or some next big thing, but chasing trends blindly? That's like sprinting into a fog with scissors in your hand. So what you want to do is slow down. Use things like dollar cost averaging. That just means investing little bits regularly, no matter what the market's doing. And yeah, diversify. Don't toss all your eggs into one shiny, unpredictable basket. And finally, seek guidance when needed. Seriously, don't let your pride get in the way. If the market's crazy, if you've got major decisions to make, like buying a house or moving your retirement savings, talk to someone who knows this stuff inside out, a certified financial advisor, a planner, even a smart money-savvy friend. So yeah, keep your money in rhythm. Watch the beat of the economy. And when the tempo changes, make sure you change with it. All right, let's just pause for a second and think about something real. Look, the truth is your money doesn't live in some kind of vacuum. It's not floating out there untouched, doing its own thing. Nah, your money, it breathes the same air as the global economy. Take that in for a second. It moves, it reacts, it shifts right along with inflation, interest rates, jobs data, market trends. All that stuff we sometimes ignore until it hits our wallets. So whether you're buying your first home or you're investing for retirement or maybe you're just trying to get out of debt, every move you make with your money, yeah, that should come with some economic awareness. Like, what's the market doing? Is it a good time to borrow? Should you be saving more or investing more right now? These are the kinds of questions we have to start asking ourselves. Because, just doing things blindly, that's risky. That's like walking into a storm without checking the forecast. Now listen, understanding economic trends It's not going to turn you into some kind of financial psychic or Wall Street genius. You're not going to suddenly predict every market crash or boom. That's not the point. But, and this is big, it does make you financially agile. It makes you flexible, ready to shift gears when life or the economy throws a curveball. And that, my friend, that right there, that's a superpower. Financial agility, it's how people stay ahead of the game. It's how they survive downturns and thrive in upswings. So, yeah, pay attention to the trends. Let your money dance to the beat of the economy, not against it. Because in the long run, that awareness, it could be the difference between just getting by and actually building something that lasts. All right, so let me ask you something. Are you really ready to start aligning your money with the economic beat? Like, are you ready to stop guessing and start actually moving with what's happening out there in the economy? Yes. Tell me in the comments, right? Which economic trend or maybe shift has impacted you the most recently? Was it inflation eating up your grocery budget, or maybe interest rates messing with your home loan or credit card payments? Or hey, maybe it's the stock market swings that made you second guess your 401k. Whatever it is, I'd love to hear your story.